Hola guys, ¿qué pasó? What's going on? How's everyone doing this morning? I've got an important message for crypto traders. You can take it or leave it, but there's a lot going on in the world right now, globally, not just in the United States where I'm from. And a lot of this is being used as catalysts to drive the markets, the commodities, index, futures, crypto. And this is reflected, I believe, perfectly in the price action currently of Bitcoin. Ethereum also. Most of the alts, as you know, are indexed to the price action of Bitcoin. So if you want to know where most 90% of everything is going, you look at Bitcoin. And there are other alts that are doing their own thing right now, kind of spinning in their own orbits, but we're not going to concern ourselves with those in this video. We're going to focus on Bitcoin and an important pattern that I've been tracking. And I believe it's come to play out and it's coming to fruition right now. And we could see it in the Wyckoff distributional schematics. Now, I've been trading for a long time. I've been doing this for almost 6-7 years now. And the Wyckoff schematics, the distribution, accumulation, redistribution, reaccumulation schematics are wickedly accurate. They don't lie. They don't lie. Why are they accurate? Because they're predicated upon the twin human emotions of fear and greed. And fear and greed are what drive the price trajectories in the bear and bull market cycles. And so Wyckoff is just a Wyckoff schematic is just a visualization of this dynamic of human psychology, basically manifest in the moving of a price or a stock or something that people want. So that's why these patterns are trustworthy. And Richard Wyckoff first identified these back in the 20s or 30s or whenever it was, and it still rings true today. Why? Because people are still greedy and people are still full of fear and follow the herd mentality. That's a big thing, herd mentality. So wherever the herd goes, you could almost guarantee that the market makers are going the opposite way. Or back then they called them the composite operators. Today they're known as the market makers. So here is a 1 hour chart that I drew out on Bitcoin and where we are currently here. Obviously here, let me get this. I want to skip all the fluff and just get down to business right now, because that's what I like to do, and I don't have much time to hang out with you guys today. So I'm going to let this just be short and sweet and to the point. Okay, so hey guys, we're going down, all right? I like to quote this movie, one of my favorite movies, There Shall Be Blood. And I like to say that when distribution patterns, I like to give out the warning. Of course, I could be wrong, but I don't think I'm wrong. I think we're going down. Bitcoin is in the last point of supply here in this distributional pattern here going down. Right now, we're experiencing a little bit of a micro pump, okay, or a micro rally, and this is typical. This is typical in these. Normally during a last point of supply or an LPSY that's come after a UTAD, see this UTAD up here, which is an upthrust after distribution. It's a slow death basically. It's the Bitcoin is in its death throes as far as like remaining in this range, and they're just at the last bastion of effort trying to stay afloat in this trading range before wholesale distribution, before basically the price goes intergalactic and goes to another galaxy. If you think of like price ranges as galaxies, I used to think that that's kind of it's a good way to kind of visualize these occurrences as this is its own galaxy here. It's like galaxies are like made up of stars and star systems and all that. So when you see either a mark down or a mark up, basically the price is leaving that galaxy, that galactic system, and going into a new galaxy. So it's like leaving the Milky Way galaxy where we live and heading off into the Andromeda galaxy or something like that. So this is leaving, it's about to depart the galaxy to form a new galaxy, and we call that, when it goes down, distribution. So this is what is looking like a top. And so we see that here normally in the last point of supply, which is where I believe we are right here. This area here, the second last point of supply. Here was the first. See how it comes up right at the end? Right at the end of this little consolidation pattern here, which turns out to be a redistribution. That's what LPSYs are, they're redistributions. But right at the end, usually the market makers will entice the retail traders who don't know any better to FOMO in, thinking, hey, this thing's going to moon. Bitcoin's going back up to 18,000. It's going to 20, 30,000. Get in. It's the last, the train's about to leave. And so right at the end, with the fear index, or in this case, greed, they will jump in. And the market makers, or the composite operators, have already set up their shorts. See right here, you can almost see where that bear block was. It was right here, because when the price, you see with this first upthrust hit it was immediately rejected and came back down to the trading range support level, which bounced after that to form the UTAD and come back down. But we're not going to concern ourselves with the UTAD. We're going to look at this UT rejection area, this cell block, which was the same almost as this one for the LPSY. So what they do is this cell block has already been in place, but unknowing retail traders jump in, FOMOing in, they get their long position short, and then when the price hits this bear order block, they're just smashed. Because the strong hands unload the supply, which causes the price to drop and get liquidated. And so that's what happened here. And then it forms this new, we're still intra-range because we have this first, the point of the automatic rally. We still haven't hit the automatic rally point. So where the automatic rally is, that's where the final LPSY is, the last bastion, or the last reign of troops that are going to try to hold the position of the battlefield. And then the same thing, we see the same thing happening. We have this bull, where we had this bull trap here at the first LPSY. Likewise, we have a bull trap in the second LPSY. And this one can go on for some, this one can go up considerably, because, they've already signed the execution papers. Bitcoin is going down. That's the grand macro plan of it all. And so they're just trying to get as much liquidity as they can before they go, remember, intergalactic, and mark down the proper macro markdown, where we leave this whole trading range system and we free fall into another range where we hit the next support. The Fibonacci retracements are saying 13,000, but we can go all the way down. We could wick all the way down to $10,000 Bitcoin. Now you need to be prepared for that. I know people want to be long in Bitcoin and you want to be optimistic, but look, these schematics don't lie. They are accurate. They've been accurate since the 20s and 30s, or maybe it was the 30s when the first one was drawn. I don't know. But these are almost 100 years old, and they've rung true again and again and again in identifying bear and bull market systems. It's cyclical. So the same thing, and this is fractal. So this is just a microcosm of the larger fractal. If you go out, I don't want to do that right now because I don't want this video to get that long, but if you go to a lower time frame, you'll see this whole thing play out in the larger scheme of things. Back in 2021, 2020, you could see a whole other range like this forming on the macro. So these things are everywhere. These patterns are everywhere. And it's good to just understand them and know them and be able to pattern recognize them and the different areas of them. You know, we've had the buying climaxes going down to the automatic rallies. Same thing here. And then the UTs, which is the up thrust, comes back down. And then the UTADs, this is the grand bull trap, comes back up. There's a final LPSY, tries to overtake it, and then retraces back into the trading range proper. Another tries to do another stand. These are all fake outs, and then boom. Eventually this will collapse as well, or it should collapse. Nothing is 100%, and I don't have a crystal ball, and this is not financial advice. All right, guys, I've got to go. Like, subscribe, whatever you want, whatever you need to do. I'm not concerned about numbers really, but I'd like to know that this doesn't fall on deaf ears. I like to share my knowledge, and all this stuff is shared with my trading group first. I run a trading group, a small private trading group on Discord. You're welcome to check it out. It's extremely affordable. Like I said, I have nothing to sell. I don't shill. I don't have sponsors. I've had people try to get me to sponsor their stuff, and I categorically just turn it down. I don't want to be involved in any of that, and I don't have any pet coins that I shill. If you like just pure price action, volume spread price action, professional Wyckoff analysis on all the major altcoins, on all the major centralized exchanges, and I also do some DeFi as well. But mainly I stick to like Binance coins, Coinbase coins, Kraken, stuff on those exchanges. Then subscribe. This will be a good channel for you, and let me hear from you in the comments. I'd love to hear from you. And you can also check my chart histories on TradingView. I have a link that I pin in the comments on the top of the comment section, and you're welcome to check out my chart histories. They're consistently, I hit the win ratio, you know, the Fibonacci extensions or retracements. I have an 80 to 85% win ratio, so I think that's pretty good. So been doing this since 2017, and yeah, and I love to hear from you guys. So all right, you guys take care. I got to go. It's getting late, and I'll talk to you later. All right, guys, be safe. Have a good one. Adios. Bye-bye.